Yeah, thank you, Darwin. A very good evening to everyone. On behalf of JM Financial, I welcome all of you to the first quarter FY2024 earnings conference call of NCC Ltd. Today we have from the management, Shri R.S. Raju, Director Projects, Shri Sanjay Pusarla, Executive Vice President, Finance and Accounts, Shri Niraj Sharma, Head Strategy and Investor Relations. So over to the management for opening remarks, and we'll follow by a Q&A after that. Thank you.
Okay, thank you, Mr. Ashish. Yes. Good evening, ladies and gentlemen. A warm welcome to all of you into the Q1 Financial Year 24 Investors Conference Call of NCC Ltd. The presentation containing the performance of Q1 FY24 was uploaded on the stock exchange and in our website at around 11 a.m. today. Now I will take you through the key highlights of the quarter, and thereafter we will take you to the question and answers. So as usual, the disclaimer before briefing on the Q1, the presentation that we have uploaded on the stock exchange and our website yesterday, including the discussions that we will have in this call, contains or may contain certain forward-looking statements relating to NCCL business prospects and profitability, which are subject to several risks and uncertainties, and actual results could materially differ from those in such forward-looking statements. So before going to the Q1 results, just I will touch about two lines about Indian economy. All of you are aware about global economy passing through difficulties, particularly severe inflation, but India has remained as stable despite the global impacts. The first quarter key performance indicators indicating the sustainable expansion in Indian economy. The growth momentum is likely to continue on a stable ready crop production, expected normal monsoon, softening of cost of materials and services. So as seen from the reports, the healthy balance sheet of all banks and corporates, supply chain normalization followed by declining in uncertainties, conditions, and favorable for a continued capex cycle in sectors like infrastructure, power, defense, etc. So now I will brief the operating and finance performance of NCCL for the Q1 FY24. This quarter, we believe that the company performed well in measured performance parameters. So as far as order book is concerned, the company secured a good amount of orders, rupees 8,054 crores, a growth of 83% over corresponding quarter of the previous year. The major orders received in this quarter are given in the presentation uploaded in the website. Among those, an order from Haryana International Horticulture Marketing Corporation Limited, an EPC mode, value of rupees 2,199 crores. Second one, State Water and Sanitation Mission, Government of Uttar Pradesh. So another one is from Adani, a value of rupees 44 crores, Navi Mumbai International Airport. So the order book as of 30th June 23 stands at rupees 54,110 crores, highest ever recorded. Our order book is well diversified and spread across various states. Right now we have 31% of orders from UP, where both UP and central government given priorities with adequate fund allocation. So coming to the operating performance of Concall. So first I will brief on the Concall performance of Q1 FY24. This quarter reported a turnover of rupees 4,407 crores as against 3,351 crores, achieved a growth of 32% over corresponding quarter of previous year. The gross profit reported as rupees 626 crores as against 501 crores, a growth of 25%. The GPM reported 14.3% as against 15.1%. The EBITDA reported rupees 409 crores as against 308 crores, a margin of 9.34% against same margin of 9.27%. The PAT reported as 174 crores against 130 crores, an increase of 34% over the corresponding quarter of previous year. Come to the group company performance, besides the NCCL, the parent company. In the group company, CCMPL has reported more turnover of rupees 466 crores as against 265 crores in the corresponding quarter, and NCC Urban has reported a turnover of 24 crores as against 88 crores. The quarter group company's turnover reports in this quarter rupees 541 crores as against 361 crores, a growth of 50% on quarter-on-quarter basis. It is on year-on-year basis. PCMPL, this is one company doing the MDO type of business, mine development and operation, along with the BGR, where we have 51% stake. And this company started about 5 years ago, and it achieved almost all what are required milestones to achieve by this time. All are in place, and accordingly the production also going smoothly. But now some of the important milestones like clearances from the forest land and getting the forest land into the operation, these are the milestones. And 90% of these milestones are completed, and 10% still remaining. And we expect the handing over the forest land by the forest department takes place in a couple of months. Once that forest land comes to this one, and the total land which are required for the operational project up to 30 years will be in the control of the MDO. Now come to the standalone financials. On standalone basis, the company reported a revenue of 3,866 crores against 2,990 crores, a growth of 29%. The revenue increased primarily due to more revenue from buildings and electrical division, which in turn good progress in UP Jal Jeevan Mission projects. The gross profit reported as rupees 58 crores as against 465 crores, a growth of 27%. The gross profit margin this quarter is 15.3% against 15.7%. But here there is a dip of 0.4% in the GPM, but effectively there is no change in GPM in Q1 compared to the corresponding quarter of previous year. Once we exclude the one-time item of claim, rupees 11 crores, accounted in the Q1 of previous year. The company has posted an EBITDA of 381 crores against 281 crores, registering a growth of 35%. In terms of percentage, the EBITDA is 9.9% against 9.5% of the corresponding quarter previous year. So there is a 0.4% increase is reported. The increase in EBITDA primarily on account of increase in revenue. That reported as rupees 160 crores against 120 crores, an increase of 35% over corresponding quarter of previous year. So the net profit margin reported is 4.2% against 4%, and EPS reported as 2.58 against 1.97%. As far as gross margin is concerned, the input prices, if you see the in the Q1, it is observed that there is a reduction in some of the input prices, but still some of the products the decline is not happened, and some products, some input prices like aggregates, sand, and this cement and this ready-mix concrete, some increase still is there in those projects, and we believe that the decline what has happened can be seen more in the Q2, since the decline gradually happened not at the beginning of the quarter. Let's come to the cash flows. On standalone basis, the cash flows used in the operating activities is rupees 123 crores against 521 crores on year-on-year basis. The net cash flows used in the investing activities 37 crores against 111 crores on year-on-year. So the net cash flows from financial activity is 203 crores against 478 crores year-on-year. You may observe that there is significant improvement in both operating cash flows and investing cash flows, which results in reduction in debt year-on-year and the reduction in working capital days. So that is about operating performance. Now moving on to balance sheet, some of the items I will touch upon. So the capex increase in this quarter hardly 27 crores. The inventory is increased by rupees 168 crores from the previous quarter, which in line with increased volume of construction activity. Trade receivables increased only by 82 crores, which hardly as against 29% growth in turnover, which reflects improved collections from the clients. The unbilled revenue stands at rupees 3,679 crores as against 3,225 crores. The increase is in line with the increase in construction activity. Coming to liability side, the debt is increased from rupees 980 crores to rupees 1,306 crores, an increase of rupees 326 crores. Generally in the construction industry, the collections are lower in the first quarter. As a result, the debt increases in the first quarter of every year. But the quantum of increase in Q1 is much lower than the normal increase happened in the last couple of years. Mobilization advance is increased from rupees 2,755 crores to 3,323 crores. So, about segment results, I want to touch. Now, the management of NCCL and board decided to provide segment results from the first quarter onwards of FY24. So, in order to disclose more information to the investors about the focus of NCCL in long term on construction and real estate businesses. The segment results were uploaded in our website and put in the stock exchange portal. We have broadly classified the total business into three segments. The main segment is construction, represents 98%. Second segment is real estate, represents 1.6%. And third segment is others, like BOT projects, it represents 0.3% of the total revenue. So in the segment results, the assets used in the core construction business works out to rupees 15,484 crores, represents 87%. So basing on the segment results, the rows in construction works out some around 18%, which is higher than the normal rows what we work for from the financial statements of the NCC standalone balance sheet. So coming to the future outlook of the company, so the order book of 54,110 crores contains larger size projects than what we have in earlier years. Now in the current first quarter, we have received 12 number of projects, value 8,054 crores, average ticket size of 679 crores. So the order what we received from Mumbai Municipal Corporation wastewater treatment project, actually O&M is 3,833 crores received a year back, and now it requires lot of permissions before starting of the project. So almost all the permissions were obtained, and these permissions, as per the contractual conditions of the under conditions, we require to submit to the High Court or Supreme Court and take the clearance from that court. So in a week's time, it is going to be submitted. All these documents are ready. So we expect the permissions in a month's time, and therefore the work can be taken up in 2 months period. But already the mobilization works, like mobilization of the equipment, manpower, and other things are in place. So the big project may be started in November or December, and thereafter this project to start to post the revenue into the results. The next biggest project is UP Jal Jeevan Machine project, 16,500 crores. Now pick up the progress and reported substantial turnover, nearly 30% in first quarter of financial year 24. We believe that this project reports substantial turnover going forward, which ultimately helps the company to reach its guidance of 20% growth given for the year 23-24. The management is also very confident to achieve its revenue guidance of 20% for the FY24. As far as cost of construction and margins are concerned, we believe that we have seen the softening of the major input prices in the first quarter, and we expect the softening continues based on the global inflation and Indian inflation decline trend. There is a latest news that there is a cooling in inflation in US in the month of July 23. So there is a good amount of orders in the pipeline, and the company also secured about 1,919 crores in July month, the details of which we have uploaded into the website. So basing on this strong order book, we believe that the company going forward maintains it to the growth journey in the years to come. So this is all about from the company side, and rest of the things like NCC Vizag Urban, Semicor, Tata, investment group companies, AP projects, during the question and answer session, we will address whatever the required clarifications, so that to save the time at this moment. So now over to the Mr. Ashish.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Please wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you very much, and congratulations on robust performance, and also appreciate detailed presentation, and I hope the presentation continues. Sir, my first question is, now considering including the L1 of GMLR and July 1900 order inflow, we have received close to 13,160 odd crore inflow. So by year end, how much more are we looking at? Can it be a 20,000 crore plus kind of order inflow, and will it also lead to what we are guiding at 20% revenue growth? Can it be a more than 25% kind of a revenue growth for this year?
Yes, Mr. Shah. About this order book, the opening in the Q1 is very encouraging, and the pipeline orders also are good. So basing on the momentum what we have, definitely the 20,000 crores plus orders we expect to receive in this year 23-24. And about the guidance, management is confident to achieve the 20% what our guidance is given, and further increase from 20%, that is depends upon by how much time the new orders really report the revenue after completing the beginning formalities, permissions, approvals and other things, since there the big number size of orders are coming.
Okay. And in terms of the margin also, can we start seeing improvement in margin, and for full year can we see a 10.5% kind of a margin, or will it remain at this kind of a 10% margin, EBITDA margin?
Yes, about the EBITDA margin, about the new projects, we have that facility to enhance the margin, but the order book what we have, it contains there are two parts of orders. One is pre-COVID orders and post-COVID orders. So as pre-COVID orders are concerned, there is a pressure on the margins because the time overrun, and as a result the expenditure whatever now incurring, so it is not getting fully absorbed. As a result, some pressure margin is there for the pre-COVID projects. So as a result, the margins, there is a possibility a little 0.2% or so at EBITDA level, and at the net profit level, last time we said that we expect about 0.5% to improvement over the previous net profit margin.
Okay, and last one data point, what is the retention money, and in terms of the if the momentum continues, can we see the same 15%, 20% kind of a revenue growth next year also, FY25?
Yes, but the company's plans to maintain that 15% plus the growth in the turnover. And since we have a strong order book at this moment, it is possible to achieve that kind of growth.
Okay, and retention money as on June?
June, there is no difference in the retention money in the first quarter also. Whatever figure we have as of 31st March is in the same level, except some 10 to 20 crore change.
Okay. Thank you, sir, and all the best.
Okay, thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Faisal Zubair Hawa from HG Hawa & Company. Please go ahead.
Sir,
congratulations on such a good turnaround that you have done with the company. Sir, do we have any kind of expectations from Telangana government for any irrigation orders going forward? That's one. And secondly, sir, how do you see HAM projects coming up in irrigation also? Because there are some states which are talking about having HAM projects in irrigation. And third is, sir, how do you see the NHI pipeline going forward? Will we also participate in BOT projects apart from HAM projects in NHI?
Yeah. So we have asked 3 questions. Firstly, we are already executing a project in irrigation sector for the Telangana government. The project is already very much live. Going forward, the HAM projects are not only coming in irrigation, they are now becoming more popular in other segments of the infrastructure market as well. But we continue to be very selective, on HAM projects. We do bid for a few projects on HAM model in roads. And going forward, we see a lot of opportunities coming up. About 50% of the market size from NHI and MORTH is expected to get awarded on HAM or BOT, mode. So we are alive to the opportunities, and as and when we are able to identify a good project, we will definitely decide to bid.
Sir, my specific question with regards to irrigation was whether we will get more orders from Telangana government.
We have to see. So irrigation, otherwise also, irrigation continues to be a relatively small division for us. So we are a bit selective in irrigation projects.
NCC generally not focused on irrigation projects in Telangana. Earlier also, we don't have any big projects or occupying any good amount of orders of Telangana. And NCC is not particular to go for the irrigation because at this moment NCC has a good order book. So it is looking at different type of projects, and irrigation we are not focusing that much because seeing the budget allocation and other things. Generally for irrigation projects, the budget allocation, there is uncertainty is there. So as a result, generally we are not that much focused or keen to quote the irrigation projects.
Correct. Thank you. It continues to be a state subject, talking specifically, though there is a new scheme that is launched by the central government, Pradhan Mantri Gramin Sinchai Yojana, but the allocation continues to be very small. We are very selective. This is not really a focus division for us. We are very much, interested in other verticals where so many good, high value big projects are coming up for bidding. So we are more focused in that segment of the market. Okay.
Thank you a lot for answering questions over.
Thank you. The next question is from the line of Ramanan from MK Ventures. Please go ahead. Ramanan, the line.
Yeah. Hi. A couple of questions from my side. One is, as you left it to us to ask the question, where are we on SEMCORP and also on the receivables from the Vizag subsidiary land sale? That's one. And second is, what would be our overall L1? How much would it be L1 in how many projects, or what quantum of projects?
Okay, now about SEMCORP. Earlier also we have expressed about the status. Now the SEMCORP arbitration process is over and the order is under dictation, and according to the timeline given to them is September 30th. Before that they are supposed to issue the order. So we expect the order anytime in the September month.
Okay.
About Vizag Urban, now the amounts, we have not received any amount in the first quarter. The amount which they agreed to pay is one installment in September and second installment in December and third installment in March. So at this moment, since already last time we expressed certain obstacles what happened to the new parties. Because of the delay, some process, they also seen certain difficulties to take forward the business. As a result, some slippage is there in the payments. So as on date, about 500 crores outstanding is there, both for the equity and as well as the loan payment. So
So these are the 3 installments they agreed to pay. As far as L1
will we get interest on this? Will we get interest on the delay?
As along with interest they pay. Along with interest. So
and is there any risk of this getting more further delayed, or or the deal not going through? Any risk is there?
Yes. At this moment, yes, as originally scheduled, that was not taken place. So now they are asking extension of time. So we agreed only in this September, December and March. So we hope that in those times they pay. But there is an uncertainty is also there. We can't say that 100% takes place, that one based on seeing the real estate momentum in that particular location. This is a real estate business. Generally, it depends upon several factors. As far as L1 orders are concerned, as we have number of L1 orders, but L1 and pipeline orders are there. But we will not disclose the value and other things before getting the LOAs and before putting into the website.
Okay. Got it. Thank you so much. Yeah.
Thank you. The next question is from the line of Ankita Shah from Elara Capital. Please go ahead.
Yeah. Hi. Thank you for the opportunity. Sir, could you highlight some of the key projects which we have bidded and where the awarding is yet to get completed or L1 is yet to be announced? So. Some of the big projects that we are looking, which are a part of our pipeline.
Ankita, good afternoon. This is Neeraj.
Hi, Neeraj.
See, firstly, you are already aware about the this project in which we are L1, this Mumbai project, right? GMLR.
Yes.
So that project, we are just L1, and it's a sort of very forward-looking kind of a statement to talk about the projects in which we are planning to bid, or we are L1, or we are targeting. It's a sort of forward-looking statement. But let me add a color. So in the normal course of business, whenever we have the qualification, whenever we have the risk appetite, we will bid for all big projects. But it would be a little premature to talk about which projects we are targeting, whether we are going to win those projects or not.
No, I completely understand whether we win or not, but just to understand how big is the pipeline and which are the key projects which are in the pipeline. We may not get it, that is a different thing, but I just want to know which are the projects in the pipeline for this financial year. Given that we are not very sure whether, how many projects will come out for bidding in this year, given that we also, we have an upcoming election. So that is what the thought process I asked.
See, Ankita, I would like to then answer this question a little differently. I would like to talk about the schemes. For example, the big signature schemes of the Government of India like RDSS. So a lot of projects are coming in different states. If you want, I can identify 6-7 big states in which these projects are expected to roll out. The AJM mission continues to be a very active, pipeline of projects. So as and when the opportunities come up for bidding, we try to see the project, try to understand what the project is all about, where is the project, those kind of risk analysis we will do, and then we will decide to bid for the project. It is really not right platform to talk about all the future projects that we are planning to target.
Okay. Got it.
Does that answer your question?
Thank you so much. Thank you.
Thank you, Ankita. Thank you.
The next question is from the line of Chandramouli, an individual investor. Please go ahead.
Hello.
Yes.
Hi. The Concall, you said that by September you will come to know. So what is the likely amount that we receive, sir, if things go fine?
I will answer. Chandramouli, this is really a judicial process, And we should not be really sitting in judgment as to what the possible judgment is going to be. I think it is sufficient to say that we have put forward our arguments, we have, submitted all the documents that we thought are helpful. Now let us leave it to the judges, the wise panel to take a final call. And let us wait for a couple of months. We expect a, final decision by September end.
What about the other ones, sir? Taka?
It's sub judice really, my dear friend. It is not the right platform to, talk about it, or rather taking judgment on a possible judgment, This
I'm not asking. I'm not asking about this. You clearly answered. I'm talking about the other one which is pending.
Just I will express about the Taka. It's a long pending case is there, but in the recent past there is some progress on the Taka discussions. So there are 2-3 line of discussions for held with the Taka, and we are trying for amicable settlement, and we hope that that amicable settlement will be reached in 2 to 3 months' time. There is a good progress on the Taka issue, and also in a positive manner to the NCC. We will let you know once the next progress whenever happens.
Thank you, sir. That's all from me. Thank you.
Thank you. The next question is from the line of Shravan Shah from Dollars Capital. Please go ahead.
Sir, but in both the cases, Semcop and Taka, net, we will not be having any cash outgo, rather whatever the amount, though we will not mention the amount, but at least we will get some cash amount. That's the way one can look at.
Yes, in case of Semcop, we will definitely get some cash amount.
And for Taka, do we have to pay some cash amount?
In Taka, some payment requirement would be there, but there will not be. It will not affect any the finances. The enough adequate provision whatever we made, and we expect that the case gets settled within that amount.
Okay. Second is in terms of the debt level, though we mentioned that it has increased 1,300 crore, but by year end, will it be lower than 800 crore?
Yes, now there are several issues out there to determine at this moment. So, basing on the normal course of business, yes, there is a possibility, but there are several issues which require to take place, like Semcop, if Semcop, yes, and Vizag Urban, and then beyond the normal course of business, certain issues are there which really gives an inflow, but we don't have any such uncertain outflows are there. At the same time, the company is looking for the growth, so looking for the bigger size of projects. So when it is looking for bigger size of projects, generally some type of initial investment may require. So it depends upon how the kind of orders and other things. But in principle, basing on the normal business, yes, certainly some more amount by the year end comes down.
Okay, and for NCC Urban Vizag, 500 crore we need to receive, but this year how much, if everything goes as per plan, 3 installment, how much are we planning to get?
Now, in NCC Urban you are asking, isn't it? Vizag Urban.
Vizag.
Vizag Urban, 150 crores is the amount which to receive in the year 23-24.
Okay. Got it. And in the presentation, sir, why when we talk about the net debt, we have taken only 271 crore cash versus cash in the balance sheet. When we saw in the other slide in the presentation, it is 804 crore.
Now there are certain deliberations and opinions on that one. As we have another 500 these margin money deposits. But the margin money deposits we kept under the unencumbered deposits. So for certain purposes we take them into the account, for certain purposes we eliminate. So in such analysis, cash and bank surplus. Now it excluding the margin money deposits. That figure we consider now.
Okay. And any broad idea in terms of the just to reconnecting to the previous participant question, broadly how much amount of projects that we have bidded and where the outcome has yet not come?
Outcome and the bids outcome.
Yeah, where we have bidded and the outcome has not come, whether the final outcome has not been announced.
What kind of amount of bids? You're asking amount of bids?
Yeah, how much value of projects we have bidded? Let's say 40-50,000 crore we have bidded and still the outcome has not announced.
Okay. That would be there around 25 to 30,000 crores. It is there changes moment to moment to that one.
And this would be largely in the building and the transport segment?
Please rejoin the queue for follow-up questions.
Okay, thank you.
The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Thank you, sir. Thanks for the opportunity. Sir, we were L2 and Ahmedabad and Mumbai railway station development project. And I think Ahmedabad and NCC will get re-tendered. So, when should we expect the tenders for this?
Talking about Ahmedabad, Delhi and Ahmedabad. The pre-bid meeting is already done. And the revised tender documents are expected to be issued shortly. The Ahmedabad, I believe they are again trying to, rework the estimate. As you are aware, the last time the tender had come and we did participate in that tender, that was subsequently cancelled. So that is also, planned shortly. In let us say about a quarter, in the next 3 months' time.
So, we will be participating alone or in a JV?
We have the qualification in all these tenders. We participate on our own.
Okay. And these are the large railway stations. So, any opportunities in the smaller railway stations development?
There are so many, in fact, there is about 500 odd, railway stations which are, planned for the redevelopment. So the pipeline is, very healthy, very strong.
Will we look at the smaller ticket projects?
Yeah, it takes time really. It takes time, and some projects, as you are aware, because you are tracking the sector, some projects are also coming on PPP mode, like Vijayawada and at a couple of other locations. So the pipeline continues to be very healthy, and but it takes time for the client to really develop the project, approve the design, then issue the tender document. But as and when a reasonably sized projects come up for bidding, we will definitely participate. We have the qualification and we do have the expertise to execute this kind of project.
And the second question is regarding RDSS. So we are already we are pending orders as well for the infra development portion of it. But will we be participating in smart metering orders as well?
Yeah. We will be. It's an inherent part of the RDSS scheme. If you really talk about the market size, there are about 25 crore meters which are expected to be installed. Only about couple of crores have been awarded. So we are we will definitely participate in these projects as well.
So have we then finalized from where will we source these meters and everything?
We have to. There are so many meter manufacturers in the market in India, outside India. So we will definitely finalize the agreement with them and then wait for this project. Incidentally, we have participated in these projects in the past, but unfortunately we are not successful. But we have participated in few bids in the past, last 6 months, let's say.
So is it allowed to import smart meters for these projects?
See, when we talk about smart meters, we have to again look at this. There are 3-4 important parts of the smart meters: knockdown meters, the smart part, the GSM part, So it depends. Whosoever is able to meet Indian standards, then those meters can be imported as well. But there are so many big manufacturers in India as well. Make in India. Yeah, make in India. So why to really look outside India when good quality meters at attractive price points are already available in India?
Understood, sir. Okay, sir. That's all from my side, and all the best.
Thank you.
The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi. Good afternoon, sir, and congratulations for a great set of numbers. So my first question is regarding our exposure to the subsidiaries. What would it be at the end of the Q1?
The exposure in the subsidiary companies in the Q1, there is no any significant change, and there is no any increase in the investments, barring 1 or 2 crore change in the investments. So at this moment, also there are no any loans to group companies. Only the Vizag Urban, there is not a group company now that amount to need to get the new buyer of that company. But going forward, we have the plans, and some part of the amount which supposed to get from International LLC, some part of the amount we expect in the second quarter. And other than that one is another BOT project is there in NCC Ltd that is going to be completed in a year's time. At that time again some capital buyback or some route they choose, and at that time we expect some inflow from that company. So by year end, some 50 to 100 crores reduction we expect in the group companies.
Got it. And what is the kind of capex that we envisage to incur in FY24?
We given in the budget in our internal, we plan about 275 crores. So in the first quarter, hardly we spent about 27 or 28 crores. So it depends upon the capex, spending of capex, it depends upon the quantum of kind of projects.
Got it. Thanks, sir, and all the best.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hello. Yes, sir. Congratulations on a good quarter, sir. My question is on your exposure to Karnataka project. So if you remember, there was a media item where they said that all the work will be stopped in Karnataka. So did we face any impact on account of that? Did any of our work stopped because of that?
Yes, now in Karnataka, you know that we have 3 major projects among others. Both this metro from city to airport, the metro projects. All these 3 projects put together about 2,150 crores are there. These projects are going on. And other projects, after the post-elections, some slowness is happened because of the new department and the new ministries and verifying the priorities and other things. But in a weeks back, they issued a GO cancelling the orders what are issued earlier. So thereby now the normal position, they are again coming to the normal position. So during the 3-month period, there is a slow but not completely stopped the works. There is a slow momentum because of this certain payments not happen. So going forward, we hope that the things go as usual. And moreover, these 3 metro projects represent more amount in the Karnataka projects.
So what will be the value of the work where they have been impacted because of the decision of the government?
The value cost would be around 4,000 crores. Out of these 2,000 crores, these metro projects and other projects, 7 to 8 projects, in which again some 3 projects we received about on the 4th quarter and 3rd quarter of the last year. So So those works we also received the mobilization advances.
Okay. Second question is on, when do you expect the LOA for the GMLR project?
Repeat me.
The GMLR project which you won in some JV with Jaikumar, so when do you expect to get the letter of award and when do you expect the work to start?
That is all normal. That is generally in the case and in a month's time, before a month, generally they take place. You cannot precisely tell once we but in normal course generally, so basing on the priority of the work by the client, so we can expect 15 days to 1 month time that LOA.
The work is expected to start in October this year. So, as Mr. R.S. Raju says, in about a month's time or so, we should be able to get the LOA. Hello, are you there?
So the current participant seems to have dropped from the queue. We will proceed to the next question, which will be from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah, hi sir. Sir, our mobilization advance of 3,300 crores. So what is the interest bearing portion and what is the rate of interest?
Now at this moment, 50 to 50 ratio is there, interest bearing and non-interest bearing.
And the rate of interest?
Average 10% is there for all the projects. Weighted average.
Okay. And sir, our capex guidance of 265-270 crores, does it include the capex for the tunneling project?
No. This is excluding tunneling project. What capex we generally budgeted or planned for this year, excluding that type of major machinery-oriented projects.
And he said that. Mr. I take back to the last call that we had in the May when Mr. R.S. Raju had commented specifically that this is a general capex. If we are able to get some high big ticket this kind of project tunneling, we will have to consider extra capex. So this statement was categorically made at that point of time also in the last week of May, and I think that was made very clear that this would be over an extra this capex of 275 crores.
Okay, and sir, how would be the accounting for this project? So it would be a one line item or line to line basis?
I have not understood your question. Are you talking about the JV?
Yeah.
Our share would be approximately 50%. So if you want to, talk in terms of value, it would be close to 3,000 crores.
So accounting in P&L, how will it be? Is line to line consolidation or
that model is not yet to reach. It depends upon after getting the LOA and the formation of joint venture and after reaching the understanding, work sharing understanding. Generally, according to my three understandings, the work will get shared about 50-50. So when the get work shared, only to the extent of 3,000 crores, the revenue recognition takes place.
Okay. Sir, what was our JJM revenue in first quarter and what is the annual guidance for FY24?
Which project?
JJM.
Jal Jeevan Mission projects. As in the first quarter, those projects reported about 1,200 crores, nearly 30% of the Q1 turnover. And in the rest of the quarters also, they report around 4,500 to 4,600 crores. And for the year as a whole, about 5,800 to 6,000 crores we expect the revenue from those projects.
Okay. So lastly, are we qualified for the pumped hydro projects and are we looking to bid for such projects in future?
Yeah, see, most of those pumped power storage projects are coming on PPP mode, most of them really.
Okay.
So as of now, we are not really bidding for this kind of investment projects. But if you are able to tie up with a good partner and he is able to bring the equity, then we might decide to really bid for the project. We are just studying the sector as we speak.
Okay. That's all from my side. Thank you.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi Shares. Please go ahead.
Yeah, thank you for taking my questions and congratulations on a good set of numbers this quarter. I mean, when I look at the way we've been able to manage in terms of order addition over the last 115 odd months, it seems to have been very, very good for us. Just if you could talk about the competition that you witness these days. I mean, the kind of orders that you've been able to manage, would you say, I mean, this has come because your success ratio with these orders would have gone up, or the opportunity size has gone up in a big way, which is, I mean, everyone and anyone is able to kind of get orders these days?
Yeah. Hi. Mr. Khurana, the infrastructure sector, I mean, it has always been very, very competitive. And we cannot really talk about the competition in a generic manner. In different verticals, there would be different competitors. And, in some projects, we will have better qualification, we are maybe in a better geared up to execute those kind of projects. So we target those kind of projects really, but competition continues to be, healthy. It is, but in different verticals, we are not only present in one vertical. In different verticals, generally the competition would also vary.
But sir, any number that you would be able to share, let's say, I mean, 3-4 years back, I mean, the success ratio on an average, I mean, across the sectors put together was, let's say, 10% of your bid for 100, I mean, you were able to find success with 10. What would that number be today? I mean, if you were to kind of give it a guess?
We then again need to dig down, in each of these verticals. There are different players, who are, for example, I mean, just to add some color to your question. If we talk about the highways, roads and highways, the people who are active there are quite different from the people who are competing with us. We just touched upon JJM, Jal Jeevan Mission or water vertical. The people who really compete with us in our electrical T&D would be drastically different from the people who compete with us in, let us say, mining division, So the competition, we need to really dig down to each of these verticals and, then talk about the competition. I would prefer to take this, Mr. Khurana, offline with you.
Sure, sir. And the second question, if you could share the Andhra Pradesh exposure with us, I mean, in terms of order backlog, how much is it today, and then the balance sheet exposure as well, please?
About Andhra Pradesh, the order backlog is about some 3,000 odd crores. 3,400 crores is their order backlog.
Okay. And so how much of it would it be the old orders, I mean, which were moving a little slow for us and you used to pay out as per the payments that you used to receive?
In this order book, about some projects they have budget allocation and those projects are in progress. But some projects they do not have any budget allocation. Payments are also pending for some time. Thereby, we have also stopped those projects and waiting for the payment to progress on those projects. As far as capacity projects are concerned, there is an improvement as far as bank guarantees are concerned. We have collected 100 crores from the capacity projects where some 200 crores plus pending is there earlier. And the outstandings, that one from capacity projects have come down to 150 crores. And in this quarter, there is no any further collection happen from the capacity projects, the same figure continuing. But they are pursuing with the AP government and they are putting a proposal about the issue of the bonds for all the contractors to whom the government has it to relating to the capacity project. But as per the projects, we have brought down the exposure, and we are picking these projects where budget, 100% budget allocation is there. So at this moment, the exposure is 3,050 crores, not the book.
Sure, sir. Thank you. That is mine, and all the very best for you, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead. Saket Kapoor, the line for you has been unmuted. You may proceed with your question. As there is no response from the current participant in the queue, we will move to the next question, which will be from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, fund-based, non-fund-based limit, last time what we have talked about 15,200 odd crore, is it the same, and how much is utilized?
Yeah, non-fund-based limits, we have about 1,000 crores or so are their limits availability. And fund-based limits, hardly we have 2,200 crores, and utilization is there about 100-1,300 crores.
Okay. Got it. Thank you, sir.
Thank you. Ladies and gentlemen, we have no further questions. I would now like to hand the conference over to Ashish Shah for closing comments. Over to you, sir.
Yeah, thank you, Darwin. On behalf of JM Financial, I'd like to thank everybody for participating in this call, and a special thank you to the management of NCC for giving us the opportunity to host this call. Sir, any closing remarks from your side? You may please go ahead.
Thank you all for eagerly participating in our earnings call, and I thank you all once again. If you have any further questions and queries, you are welcome to contact our Mr. Neeraj Sharma, who is heading the investors, and also CFO, Mr. Osarla Sanjay. Thank you all.
Thank you. On behalf of JM Financial Institutional Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.
Thank you.